It used to be something that I thought was the be-all and end-all of life. I really did. I used to just want to be rich. I remember that. And then my dad got sick, actually. And then I thought, that's not going to change his illness. The fact that he had money, that's not going to change anything.
Yeah.
And then I started thinking, okay, to facilitate the ability to make everybody around me comfortable, that's the biggest lesson I learned, is I changed my perception on what money could achieve. I thought it could achieve anything, but it can't. What it can do is facilitate most things. So yeah, that's sort of where my perspective changed a bit on money.
Welcome to the Young Money Podcast with Ross Marais. This episode of the Young Money Podcast is brought to you by More Time Financial, a financial planning, money management and financial education business helping young Australians to make smarter decisions with their money.
Welcome to episode 26 of the Young Money Podcast. I'm your host, Ross Marais, and in today's episode, I sit down to chat with James Nicofridis. James is currently the sales and marketing director of a property development company called New Dev, which he runs with his two brothers. James has also recently created a buyer education platform called markets.com.au, where he's on a mission to try and educate those looking to get into the property market and buy their first home. Unbeknown to some, James is also the lead guitarist in a band called The Vernons, which for anyone who hasn't heard of them before, I would highly recommend that once you've done listening to this episode, I would go and check them out on Spotify. In this episode, I chat with James about the entire property development process from start to finish, his personal love affair with property, his experience buying his own properties, and then also those buying development lots for his company, his family's history of building some of Gold Coast's most well-known buildings, his advice for anyone looking to buy an investment property, and also a very strong warning for anyone looking to get into the property development game. Really hope you enjoy the episode. Now, before we get started on today's episode, this is just a friendly reminder in order to keep our lawyers happy that in preparing this podcast, myself and any contributors have not taken into account any particular person's objectives, financial situation, or needs. So before acting on any of this information, you should consider its relevance to your personal circumstances, and if required, seek the assistance of a licensed professional. Welcome to the podcast.
Thank you very much, Ross.
Now, if you want to start off with who you are and what you do for a living.
Okay. My name is James. I am the youngest of three brothers, and we all work together in the property development industry. Our family's been at it for the last 45 years. Our grandfather and then our father, and then we joined the business. It's interesting because being Greek, you expect that kind of lineage, and everyone owns a fish and chip shop at some point, and we were lucky that we didn't have to do that bit. But we've got it's really interesting working with my brothers. We do predominantly on the Gold Coast, and we've got some interests in different land developments between the Gold Coast and up to Brisbane. So all aspects of property, but I major in the sales and marketing. So sales and marketing manager would be my title if you were to give me one. Okay. But I'm the most frustrating of the three brothers. Is probably my proudest title.
Is that their opinion of you?
I don't know. I think they'd probably swear in that little title more than I did, but I would assume so. But we work really well and coherently as a team, which is a benefit. My eldest brother, William, has by far the most experience from the construction and development side.
Yep. My
middle brother, John, is a solicitor, and he does the legal and finance side. And then I've been doing sales and marketing for as long as I can remember. Okay. I used to sell my lunches at school because I had these fantastic Greek lunches, and then other people would have sandwiches, so I'd sell my lunches and go on to the tuck shop because that to me was a novelty. Who knows? Who would have thought?
Excellent.
But yeah, property development's the game, and we really, really enjoy it.
So currently under the banner of New Dev?
Currently under the banner of New Dev, yes.
And that's a relatively newer
venture?
Yes.
Yeah. Nikon Developments was the flagship. The Nicofridis group is the group of companies in which the development companies sit under.
Okay.
But Nikon was my dad's company and my grandfather's company, and we are New Dev. More of the affordable quality in the right positions kind of property. The Nikon stuff was a larger and higher quality finish.
Okay.
than we're producing at the moment. But
So for someone like myself or anyone listening that has not much experience in the property development industry, or what's the typical day in the life of a sales and marketing director or sales and marketing executive of a development company?
So we don't have a typical, sadly. I wish I could say we had a typical property development experience, but in my experience, I'll do my very best. Usually it starts with a coffee with an agent or a valuer or somebody in the industry in the mornings. Sit down and find out, okay, what's moving, where's the market, what's selling, who's selling what, what's available, what sizes are they, and who's buying. So basically you're trying to get a lay of the land, because our business is creating a product and selling a product. So I try and understand what people are looking for and who those people are that are looking, so we can best facilitate their needs. The other interest, the construction side, William is covering entirely, and the finance and the legal side, John is doing his research on that end. We all interweave, but that's where the morning starts. Then get in the office and just start looking at sites, feasibilities, having a lot of coffee. Happens to be a mainstay.
Yeah.
Although nowadays we're starting to drink more juice, which is more expensive, but tastes as delicious as well. So
Maybe healthier, I'm not sure.
yeah. And then in the afternoons we like to get together, have a bit of a strategy vision meeting, look at those feasibilities and make sure that everyone's coinciding and share the knowledge that we've learnt from the meetings that we've had in the morning. So what is this person saying? I heard something a little bit different to that. Why are there discrepancies? And then we do try to, at least once a week, catch up with one of our mentors. Okay. We're lucky because we have mentors in the industry, and wherever we can tie them down, we try and have those meetings as well. That would be a typical day. They want us in the office more, I think, than we make ourselves available. Yeah. Yeah. Which if Dad was still around, I think he'd expect us to be in the office more. So we're a bit cheeky there, but the relationships are the game.
Sure.
And providing something that people want, not what you think they want. It's what they actually want.
Okay.
So that's what we try and do.
Excellent. Now, how is that? It mightn't actually, from your answer, it might not be that different. But how does that differ from what your friends think you do on a day-to-day basis?
Interesting question. I think my friends don't think I do anything, so it doesn't differ that far.
It probably doesn't. A lot of coffee, it's a lot of meetings, and not too much time in the office.
Let's just leave it at that. But excellent. I mean, a large amount of it is spent in those coffees. Though you're finding out things that if you weren't there having those conversations, you wouldn't be able to find out, because I do a huge amount of reading. At least I try to, of more events that are outside of the property industry to try and find out what market factors are going to impact on the industry that we work in. That being said, the best way to get that information, you can read statistics all you want, but the coalface is where it's happening. Yeah. So outside of the walls of an office and out on the street is where people are. They're not in my office. Yeah. So I've got to go find them. That's what we try and do.
Excellent. Now, if we think about property, and it's such a broad term, but why do you believe, so someone in your position with your experience and your knowledge, why do you believe Australians as a whole have such an obsession with property?
That's a very good question. I think it's a reliance. It's an inbred reliance on property, because if we look back at the lineage, a huge amount of people came here as the first settlers. And we're not going to get into the discrepancies about what was here at that time, because I wasn't there. I can't comment.
Good thing. Yeah.
But I think that then to own your own independent piece of land and be your own person and have your own rules, I think that was a really important factor to people when Australia was first forming, through the hardships and the wars and then the peaceful movements and all of the things that we've seen along the way. I think that the obsession with property is much more of... Sorry, I've lost my train. I'm trying to... It's hard, Ross.
Would you say, like, I think of it as an obsession. Like, that's my personal belief, that if we as a country, and again, I wasn't born here, so I can't comment on what's happened in the past, but I see it that it's an obsession, that it's in the media everywhere. It
Yeah.
dictates, our politics, our governments are writing policies or changing legislation around property. Like, it's such a big topic and it affects all of us.
Yeah.
And it just feels that, I feel that, especially the younger generations, the people that I'm talking to and people that I'm providing advice to, that it's just, blinders on, it's property. I want to buy my own home.
Yeah.
I want to buy my own house. I want to buy an investment property. Like, there's just nothing else. That's it.
Yeah.
Like that, and it seems, that's why I think it's an obsession. So I'm curious to know
It's a very interesting point.
what you think or what you see from your side of the fence.
Yeah, I see that obsession, but I don't want to appear like I'm just going to spruik property for everybody, because that's the only thing that you can do. There are so many options that people have. I think that there's a security, and there is an inherent habit in all people to be secure. So if you own your own piece of land, then I think there's that security that comes along with it.
Yep.
There's also the pressure of generations before us. So our grandparents would have pressured our parents then pressuring us.
Yep.
We've got a huge amount, a very large immigrant base that has built this country. Almost everybody that lives here now, or the majority of people that exist here now, have either come from overseas or have lineage of people that came from overseas. That's not, you can't argue that. And I think that once they arrived, they thought, okay, I'm here now, this is my new home, and I'm going to own a piece of land, and that's going to be my home, and my family will live in it for generations to come. The media, I'm a little bit sceptical, because I believe that their job is to sell what it is they're peddling, and then by doing that, they polarise. So I cannot see how you can have a news organisation that in the morning says that everything's going to hell, and in the evening says everything's fantastic. And somehow they can run that at the same time.
Yeah.
I don't know how that works. So I think that they purposely dumb us down to try and get us to react emotionally, instead of using logic and actually reading statistics and speaking to people out on the street that know what the market's doing.
Yep.
So I suppose that's why I hesitated a little bit, because I wouldn't say that what I do for a living is an obsession, only because it is my life. So probably is an obsession.
Yeah, sure.
So I'm shrouding myself in some kind of disguise where,
Yeah.
everything I do is property. I bought my first home. I've bought property as a business for a couple of years now, but my first home to live in, I bought that recently. And I haven't stopped kicking myself, because I think I could have done better, and this could have been better, and this could have been better. I'm just lucky I've got my family and my mum who's over the moon, and she won't stop telling me how good it is.
Yeah.
You know, so those things are reassuring. But
So
you're not wrong.
Yeah. So if and disclose what you are willing to here, without, just tell me if it's too personal. But you bought your first home how long ago?
Oh, I bought a unit a long time ago. This is my first house.
Gotcha. Okay.
But I'm talking 3 months ago.
Yep.
Two and a half,
recent.
3 months ago, yeah.
How's,
And it's being renovated, rejuvenated now.
how's that experience of buying
Very
a home?
exciting.
Yep.
I tell you, there are rules that I like to follow, and there are rules that we follow when it comes to properties that aren't our residential homes. On this one, I broke one of my rules, which was I bought it over the phone at auction instead of... One of my rules is I'd rather be there on site, get a feel for the auction, because then you have a better way of knowing if you want to negotiate or keep pushing.
Yep.
And this particular one, we had a function, I had to be there. And I was calling in to see, okay, what's going to happen, and then the price was there, and I thought, I can't let that go. So I was in there, and I was lucky to be in there.
Nerve-wracking?
Very much so. Very much so. Whenever I buy property, I get excited and nervous and a little bit butterfly-y, but with a clarity.
Yeah.
There's normally a clarity.
Are you, going to the business side, is that your role in the business, actually buying pieces of property, or are you on that side?
Normally, very good question. The three of us will all have a say on what we buy and what we don't buy. My role is to find opportunities.
Yeah.
William will then tell me if it's a good idea or a bad idea. And finding the opportunity, I think, that's where that obsession comes in, because I'll look at property all day and all night. I love it. I like driving around, looking at it. If there's a for sale sign and I'm out, I'll stop, take photos of it, take 10 minutes out of my day, and people that I'm with have moved on down the road, because I'm just reading the sign, walking around going, because I could see what could be there that I don't think other people would be able to see, and we're just programmed to see it because we grew up around it.
So
Yeah.
I'm curious to know that experience of what you do every single day, looking at, I assume, from an investment perspective for the business.
Or from a business perspective.
Then how is that different emotionally when you're looking at something for yourself to live in?
That's where it was for me on that particular occasion. I found it difficult prying the two apart, actually.
Sure.
And that's when I was kicking myself because I had a budget and I had gone over, not a ridiculous amount, but more than I wanted to go over. And there were little things that were dragging on me, and I had buyer's remorse, and I was thinking, what have I done here? But that's where it's good to have a network of people around you who just kept saying, mate, honestly, you've done well, it's a good thing, stop thinking about those things because the pros have outweighed the cons. So I was able to sit and analyse the pros versus the cons, and it worked out okay in my favour. But yeah, it was hard to pry it apart.
Because I think, and I see it from my perspective, that it is such an emotional decision.
And a huge chunk of cash.
Yeah, most definitely.
Yeah.
And that process of going through it, especially, I assume you would have experienced that process a little bit more than most people, so it mightn't have been your first time, but for most first home buyers, there's all these legal documents, there's the bank's calling you, the real estate's on your tail to try and you to buy it, there's your parents are telling you what to do, your friends are saying that you shouldn't do it, you should that, and there's a lot going on.
And your boss is all over you, and you've got to get to work at this time, you've got to get out of work at this time to go and do this, you've got a social club. Life gets in the road. I suppose that's where I was lucky in this instance because it is the business I'm in.
Yeah.
So me looking at houses is still me at work.
Yeah.
And that's where I feel for people because then they're at work during the day and they can't get all the research done. And that's where Market, which we can talk about at another time, but the buyer education platform that we've started, Markets, is there for people to sort of fast track it. And it's all in one spot.
Yeah.
Anyway,
definitely.
I'm here for that. Yeah.
So the few things to unpack from that is there's so many different types of property. So I just wanted to see if you could break down for me what it is, the different types of types of property, because it's such a broad topic, I guess.
Really, it falls into two categories, but they can splinter into three, or splinter into more than that. But residential and commercial. Residential being your townhouses, units, houses, house and land packages. Really anything you're going to live in or could be lived in. Then there's commercial, but commercial breaks into retail and industrial and offices, and that really splinters out into a whole lot of different options.
Yeah.
But when you hear commercial property, normally my head would jump to office space first, and then retail. Retail being shops, restaurants, what is it called? Apparel, clothing, things like that.
Yep.
Industrial, which I don't think is. I think industrial still falls under a commercial category, but regardless, that would be that third that I said that splinters.
Yep.
Industrial being warehouses, manufacturing areas, those kinds of things. Industrial is very, very popular at the moment, especially here in Queensland, but across Australia, industrial is starting to get a bit of a push, but the price point's gotten up there.
Okay.
Residential slowed down somewhat, because our entire business is dictated by money and the flow of money and the cycle of money. So when you are watching the news at night and you think that property prices are falling for no apparent reason, there's normally a reason, and the reason is normally because people can't access money. And that's what we're seeing. I'm not saying that's a bad idea.
Yep.
Even though as a property developer you should say whenever the banks stop lending it's a bad idea, but it's not a bad idea because it calms everybody down. We had this conversation earlier, but I think that what's most frustrating is we get in these steep halts and then these really aggressive shoots up in the marketplace because the bank should have been doing what they're doing now for the last 15 years. Therefore, it would have been more calm, but cycles are cycles because humans are humans. You can't blame banks. It's just a part of humanity, is at least how I look at it.
And I think especially going back to that obsession, it's emotional, it's an emotional purchase, so there's emotional decision and it has a flow-on effect.
Right. And we can't escape that. And as soon as we do escape that, then we should be worried because then what kind of society are we going to live in? So I suppose, once again, being European descent, I have that romance with emotion. that I can't quite let go.
Yeah.
I don't mind when people get a little bit cranky, and I really like when people get really happy and really smiling, because that's life.
Yeah.
And you don't really want to stifle that. That's why cycles sometimes you can't prevent, so you've just got to put your best foot forward and work as hard as you can and as smart as you can.
Yeah. And I think the interesting thing that comes with that, and you touched on it earlier about the media playing such a big role in the messages that they convey. And what I see is the message of property prices are increasing, property prices are decreasing. It just seems to get bundled together. That it's just, we live in such a big country that what happens in Perth can not have any effect whatsoever that what happens here in Queensland.
Correct.
Or the vice versa. Like it's such a broad country that when you watch the news, the headline, and they do a great job to sell the things they need to sell, and obviously that's why they do what they do. When they say property prices are falling or property prices are increasing, if you don't buy now, you're going to miss out forever. So then people get on the phone or they come running in the door and they say, well, the news said if I don't buy now, it's all over. I'll never own a house in my entire life. What should we buy now? So well, let's slow down first of all. Are they talking about investment property prices? Are they talking about domestic places to live in? Are they talking about capital cities? Are they talking about regional towns? What is the media trying to? What are they saying?
Sadly, you're not going to get that information either.
Unfortunately not.
You're
But
not going to know.
They get the headline.
Yeah.
They do the good job. They sell the paper or they sell the news they need to.
They get the eyeballs.
They get the eyeballs, and then unfortunately, what I see is that we get the investment properties and we get residential or principal place of residence where people live in, and people just kind of mix the two together. I find, and I'm not sure if you've experienced this, but you talk to someone and say, well, I want to buy a house, or someone said I should buy a property because property never goes down, and all those things that we hear. And we say, okay, well, what are we buying a place to live in? Are we buying a place to invest? And there's so many different elements that go into it. Yeah. I'm just curious to know what, from your perspective, what have you seen when people just talk about the property market as a whole?
Yeah. First and foremost, I fully agree with what you're saying in the sense of it doesn't even need to be the width of the country. If you look at Sydney recently, and they say that the prices are falling through the floor. Yeah. In certain areas, yes. But this is within the same city. If you look in the key suburbs of the east, the rate of sale has increased and the prices have stayed the same, if not gone up. Inner west, outer west, the prices have gone through the floor. Yeah. Now, that's the same city. So when you hear you're losing 20% and 20% of the value has come off in capital cities, you just need to be really careful, and you take it with a pinch of salt, and you say, okay, well, that is happening. Yep. Understood. Now I need to go one layer under, because I'm not getting enough to make a decision on the amount of money I want to spend if I just take the surface value. I have to peel it back a bit and look underneath. Yeah. Because once you do that, you'll realise, okay, inside the inner part of Sydney, where the majority of the jobs are, the majority of the wealth already is, most of those houses don't transact for 20, 30 years. These people have a lot of money already. If not, they've made a lot of money in the last 15 years from the property market going through the ceiling. But then those houses in the inner west ring, which were people who are newer to Sydney, that got caught up in a huge upswing, they needed a place to live. I mean, I don't blame them for buying the property at the prices that they bought it, because they had to live there. And they were ready, they had the money at the time, they probably had a good plan because things were going well. So yeah, don't take it on face value. Don't let it, listen to it, but don't let it get to you. As in, listen to that and go, that's really interesting, I need to know more. Yeah. Don't just go, well, the world's ending, what am I going to do, make a snap decision? Yeah. As I said, I'm a romantic when it comes to emotions, and that happens to me quite a bit. But I just take a couple of deep breaths and I think, okay, hold on. You can't have one without the other. Yeah. You know, there's got to be balance. There needs to be an equilibrium somewhere. So what is that? And go and find it. Yeah. And it's an element of not being lazy, because sometimes you just got to not watch the 5th episode in a row of a certain show and maybe spend one episode's worth of time reading. Yeah. digging underneath and going, that's what that is.
And I think, as you said, you're spending a lot of money. You've saved all this money. You're about to invest all this more.
Or you're going into a lot of debt.
Got a lot of debt. At least do some homework, or let's do some research, or as you said.
I mean, if you do it and you don't, then I won't feel as sorry for you if you do it and the market turns on you. Because if you do it and you don't, and you've made a decision based entirely on your gut, then best of luck, but you'll only get it, and the statistic is, I think, 34% of the time you'll get it right.
Yeah.
That's, I think, the statistic. If you go with your gut feeling, especially in negotiation, 34% of the time you'll be right. Every other time you're wrong. So do your research and fix those numbers.
That's the message.
Yeah. Do your research, exactly.
Now, going on to that, people maybe that don't do their research, what have you seen in your role in the property development space? Horror stories, misconceptions, nightmares, things that have when it's gone wrong.
That's a really good question. So I'll look at it from a development perspective. I think when developers don't listen to the consumer, that's when I think things can go wrong. And an example of that is recently on the coast we've had a boom of sort of owner builders or people who see opportunities because the prices of a house is not overly expensive, and they can split it into a duplex and then develop that. But they're not doing the numbers right because they're being told by people who are manipulating them a little bit because they want to get a sale across the line. They're saying, no, this will work because this is what you can do. And because they're not digging deeper and speaking to the right people, they take it on face value, they build something, and let's say that they're building 2 duplexes for $1 million in an area that have sold houses for 850, because that's the only way it's going to work. Not because they can't sell it, it's because that's the only way it's going to work is if I sell it at 1 million. Now that's a serious problem.
Yeah.
So by doing your research, you put yourself in a much better position. Basically, you're never going to stop a market or a downturn when it's as aggressive as, for example, a GFC. And that was fascinating to live through. And I was lucky enough to not really be fully into the workforce at that time. Yeah. I was working and selling, but I wasn't in the development workforce at that time. But our family were very, very much involved in it.
Yeah.
And so that you can't prevent. But doing your research, buying land for the right price, knowing what you can sell it for because you've spoken to people who are actively selling in the area at the time, knowing where the buyers are coming from and how volatile their situations are.
Yeah.
Because if you've got people who are coming in and buying property and they're driving an Uber, then you really have to question though, what else are they doing? So if they're driving an Uber because they also have a job like a nurse, sell it to them. They'll always be working. Always. But if there's someone driving an Uber and they're in uni, they're about to finish uni and they could get a job here and they want to apply for a loan, then you've really got to wonder if you want to sell that property to somebody, and if that's where the buyers are coming from, are you going to be able to sell them and settle them?
Yeah.
So yeah, I think
that's not exciting. If I'm building a duplex, I want to sell it for $1 million a pop and make my profit and sit on the beach and take a 2-year holiday.
I hear you.
But I don't want to do the research, James. I don't want to dig deeper. That's not the fun part.
And that's okay. And people will take your money anyway.
Yeah.
So that's up to you.
And that's I think that's the scary
people
part.
People will take your money anyway.
What we were talking about before, those inherent conflicts of, like you rightly said, who's giving you the advice?
Yeah.
Who's telling you these things? Is it the person that's going to make a 20% or 10% or whatever commission on your decision?
Yeah.
Or is it the person that you've paid for to get independent
Correct.
valuations or whatever
and
have you?
There's nothing wrong with them being remunerated for it. So that's not really what would hold me up. I have no problem if someone's fairly getting paid for it. But if they're selling you something that is not worth what they're selling it to you for, and they're telling you unequivocally that it is definitely worth that, if not more, then those are the kinds of people that sadly exist in this world. And you can avoid them though if you know, well, I know 3 of those houses in this street sold for 800 and you're trying to sell it to me for 1.2. So I know you're full of shit.
Yeah.
Excuse my language.
No
so that's
problem.
where you start.
Yeah.
Because I know that information, I'm able to say to that person, there's something not quite right here. So let's go down the road and look at that house, and then that's 1 million, and you go, okay, that's better. It's still not the same as the sale prices, but what's changed? Okay, money's freed up. Maybe I can buy this and in 12 months' time sell it for 1.4, and I've made some money. I mean, that would be an ideal scenario.
Yeah,
it doesn't happen very often.
Yeah.
But
You can't lose on property. Property never goes down, James.
8%, I think, is the number. I think 4% per annum.
Yeah.
8% over. You're supposed to. Rule of thumb is every 10 years your price should double.
Yep.
The value of your home should double every 10 years. But then you have seismic events like the global financial crisis, and that sets you back.
Yeah.
And then you make up for it.
So lack of planning, lack of homework, lack of research.
Lack of research. And building relationships. We try and push people on markets a lot to say, I mean, these people that are out there selling things will talk to you because that's why they're there. And they want to hear from you as much as you need to know what they know. And they need to know what you know as the same way. So if you see an agency sign, very popular at the moment, what's happening a lot is people aren't talking to agents on the phone or face-to-face, they're emailing. I can understand that because you don't want to be bothered by some flog that's just trying to sell you something that you don't believe is correct. But if you just approach them like the human being that they are, and you just go, this is what I need to know. Let's just be honest. I really appreciate your time. This is what I'm interested in. Let's talk about it. Is that around? Is what I'm looking for, if it's not this, is that here? And build a relationship with that person.
Yeah.
Because it's highly likely that that phone call will come in from that agent. And they'll say, mate, I've just left the home of somebody I've done an appraisal on. It's exactly what you've been looking for. Let's get you through. Now, they're going to get something out of that.
Sure.
They're going to make some money out of that. But it's exactly what you're looking for.
But they're providing value. Like you said, they're getting compensated,
Exactly.
which is fine, as long as they're providing
Correct.
value up
As long
front.
as they're providing value. And then if you've done your research, you know what you're willing to pay for. Sorry, you know what it's worth.
Yeah.
And you know your budget because you know what you're willing to pay or what you can pay for it. Marry them up and get the deal done.
Yeah.
But the one thing I'd say is if you're on any of these like realestate.coms or on developers' websites and things and you see them, call the agent. Go and meet them, go on site, speak to them. Because that's why they're there. And if they're rude to you, then they lose, not you. You win. Because why bother talking to them?
Yeah.
They're there to facilitate your needs as a buyer. They're not there for any other reason.
So, the key takeaway from that, buying a home to live in, buying an investment property or buying an investment lot that you're going to do some, put some townhouses or do anything.
Yeah.
Research,
Know
find
your
out the
position.
information, know your
Yeah.
position, know exactly what's happening,
Yeah.
and you can
Yeah.
potentially avoid some of those
Correct.
horror
And if you
stories.
need to borrow money, get pre-approval. Because we're speaking to 18 to 35-year-olds, right?
Yeah.
If you need to borrow money, get pre-approval before. So do your research, know the areas. You can do all that up front. Start building relationships. That's fine. Most agents they'll be dicks until they know you got some money. But so by knowing pre-approval, by knowing the area, and then go and get your pre-approval, because then you can negotiate. And if you have the ability to act quickly, you can negotiate easier. If you say, awesome, this is exactly the house I wanted, and right now there are two buyers, the contract fell over, somebody's like, this is a great opportunity, I'll give it to you for this much under the asking price, and I'm acting now, and I'll settle in 30 days.
Yeah.
Would you rather that, or, okay, cool, I'll sign it subject to finance? They're not going to act.
You put your best foot forward.
Put your best foot forward.
Yeah.
Also, negotiate.
Yeah.
Negotiate everything. Well, I negotiate for a cup of coffee, so I'm a nightmare. I'm not.
Do you win?
No.
No, you don't win.
Sometimes.
Sometimes.
But rarely. But I enjoy the sport of it. So.
You have to pay that $4 for the coffee.
Which is just. Anyway.
Another kettle of
we
fish.
can't get in. Exactly.
So if we think about the development side of things, so talking about investment property and property development, what's the stages you go through? So assuming I want to get into property development because everyone else seems to be doing it, everyone else seems to make lots of money from it. It seems easy
It's not easy.
from a novice.
Yeah. I just want to put that across though, everybody.
Great.
It's not easy. But if you're willing to work hard,
Yep.
you might have a go at it.
Excellent.
You might make something of yourself.
Yeah.
fuck, it's not easy. Anyway,
so what's the process, or what's the stages? Obviously, I'm sure we could spend 3 hours on that.
Oh, definitely.
What's
I've summarised
the
it a
high
little
level?
bit. Yeah, so it would be acquisition to planning and design, then construction and finance, sales and settlement. Now, settlement doesn't need to be there, but I mentioned settlement for a specific reason, and we'll get back to that. So acquisition is finding the site, acquiring the site. Really, finance is a line that runs all the way along the bottom. So finance is constantly something you need to factor in. How are you going to pay for it? Where's the tax come into it? How are you going to pay for the construction? Keep the land, borrow the money? What are your interest repayments? All of these things that are factored in. So acquisition first, then planning and design. So there's the site that I like. What can I do with it? If I can do 10 stories, what would 15 net me? What would 20 net me? Then you go to a planner and go, okay, let's do impact or code. So I know that I'm jumping around a bit, but essentially planning is you go to a town planner. A town planner will tell you what you can do on that site.
Based on council regulations.
Based on the council town plan. The city plan is called here now. But with the city plan, there are 2 types of assessment. There are more than that, but these are the 2 main types that you'll always encounter, which is code assessable and impact assessable.
Okay.
Code assessable is just follow the rules and you can build it. Impact assessable is you want to bend the rules or change the rules, and then you definitely need a town planner, and it's going to cost you a lot more money. But if you believe that there is a case for it and you believe that this site would be better used and maximise your value, then all the better for it, and good luck to you. We tend to do impact the majority of the time, but things when you come to the Gold Coast like the Oracle wouldn't exist if people didn't think that impact was something you want to do.
Sure.
So Dad was very much an impact kind of thinker.
Okay.
And then design. So you've got your architect going, yep, this is what you can. So this is what you can do. This is actually what you can do. Because I've drawn it. This is what you actually can do. So there are many phases of those things, and they're always moving parts. But to break it into that, we've done acquisition. Now we've done planning and design. The next would be construction and finance. So finance, you need to know how much you can borrow on the land, how much it's going to cost to build, all of those things. But that, once again, is going to run all the way through the project. Construction, you speak to a builder, and you go, I've got all these plans, I've got the development approval, the DA, how much is it going to cost to build, put it out to tender. That's if it's a developer that doesn't build themselves, and then that's your construction phase.
So just jumping back onto the finance side, obviously being the Young Money podcast, we like to talk numbers and things like that.
Of course, we can try, No, we can try.
Is it typically, so obviously we're talking general from your mum and dad wanting to subdivide a lot and build a townhouse to building a 15, 20 story construction or
50 to 100
multi-level. Multi-level something. Are you typically see most people funding it themselves? Do they go to the bank? Do they go to like a private
Most people
lender?
go to the bank.
Yep.
The big ones fund it themselves.
Okay.
Harry Triggerboff of Meriton funds everything himself. He used to borrow money, he doesn't have to anymore.
Okay.
That being said, normally people will borrow half, 50%, because then you're not losing all of your own money.
Sure.
You know what I mean? There's less risk, but if things go really bad, then you're not losing all of your money. There are so many options. Majority of the time people are borrowing.
Okay.
If you're building it yourself, it's not for something that's enormous, unless you're a billionaire. It's not for
Sure.
something that's enormous. There are some people that I've heard of in town at the moment that have got a lot of money. They've worked a long time in their lives. They've got a lot of money, and they're starting to build little 8 packs, 16 unit kind of things, and they can afford that themselves because it's about up to 20 million.
Okay.
So you're not talking chump change. This is
Sure.
And it's very expensive construction price at the moment.
Well, I assume that, and the reason why I wanted to dive into that is that that finance piece would have a pivotal role on the
100%.
entire thing. That everything hinges on that.
Yeah.
So
Money.
what is it going to cost? What can you borrow? And then, as you said, we go on and on.
When can I buy the land? Because especially if it's on the market and not an off-market sale, if it's something that other people are looking at, it's highly likely that there is a huge fish swimming around above your head and you've got to try and get it before they do. Because when they do it, it won't mean a thing to them. They can buy 50 of them.
Sure.
So you've got to be smart, you've got to negotiate and get the terms that you want. And that's where the relationships come in your acquisition side. Because if you've got agents calling you and going, this isn't on the market, then you have time to find out how much money you can get. You have time to negotiate a price that you deem as fair. You have time to even work with the owner of the land and maybe get a joint venture out of it, a JV out of it.
Yeah.
So your options change. But if you can't find that land off the market, then you're lumped in with everybody else. And then that's hard.
Sure.
That's harder to do,
Yeah.
I find. So, yeah, finance will always run from the start. Normally, it is borrowing money.
Okay.
And we borrow money 9 times out of 10 because our risk, we want to split out
Sure.
our money risk down
Okay.
the middle. After construction finance would be sales. So sales is also something that goes on for the majority of the time, but that's what I need to try and specialise in, so the sales and marketing side.
Yeah.
And that is literally going to market saying, this is what we're offering. Do you want to buy it?
Yeah.
Do you not want to buy it? Why don't you want to buy it? This is why it is actually better for you to have it.
And I'm surely someone in your position, as you said, doing the coffee meetings and doing the research and finding out that information, you're not going to build something and with the hope that it's going to sell. You're going to build something in a position with a type of unit or a type of property that you know
that is more likely
based on your research and based on other factors.
And that's where the market is. However, there are many times in the past that people have built a building or they've got a DA and they're halfway through it and the market shifted. So then they have to adapt.
Sure.
And if you're rigid and you don't have flexibility, then you're in deep trouble. But if you're speaking to agents and they're going, I know that you want me down here to sell your building, but for the last 2 weeks, I haven't found a single downsizer. I'm only speaking to investors that want $500,000 product. That's when you've got a serious problem.
Sure.
If it's the other way around and they go, which is the market we're in now, there are no investors at all. So people want to spend, I don't know, they'll spend $1 million because they've got it, but they want a huge unit and they want all of these. So then you have to amalgamate.
Yeah.
That's where car parks become an issue. So you're a juggler in property development. You're the ringmaster. All the balls are up in the air, and you've got to try and catch them all at the same time.
It's a great way to put it.
It's really hard to do that bit because normally you're standing on a ball that's getting pushed by other people and everything's on fire around you. So that's property development.
Are you talking from personal experience?
Yeah. I've seen Dad do that on his pinky toe, upside down, trying to twirl a basketball on fire, and the place falling down around him. But it's possible. You just got to think outside the box if you can. And then settlement. The reason I separated settlement from everything else is for a developer, that's all that matters. Settlement is the time where the agreement and the contract of sale is settled. So the matter is settled, you pay the money, we receive the money, you get a unit, we give you the keys. That's the important part.
And on that, so let's take it from a multi-unit development. Mm-hmm. You sell, assume everything's sold, be a great scenario, everything's sold, you then walk away. Hands are wiped, clean, you've made your money.
You can.
You step out, you don't manage the building, you don't do anything, it's completely separated.
Yeah. There are facets of it. Yes, that is one of the options. If you care anything about your brand and your reputation, then no, you don't just walk off.
Okay.
You do your very best to facilitate people's needs. A lot of the time people will be upset with you and there's nothing you can do about it. It really depends. If you're the developer builder, then you're on the line for 6 years and 9 months.
And that covers anything
that's
going
where
wrong.
defects come into it. There's liability periods, and if there's serious structural damage, like down in Sydney, that Opal building, that it's starting to fall apart because the concrete was poured incorrectly, I believe, and the structure's starting to fall apart. That's where whoever the builder is on the hook, because that is a serious structural issue. And if they were in Queensland, they within 6 years and 9 months have to remedy that. If it's outside the 6 years and 9 months, then you're on your own. But we'll stick, because it's so broad, we'll stick to development in units. Basically, how we do it is you meet somebody and they want to buy a unit, you do a contract of sale and you get up to 20% as a deposit that's held in trust with the solicitor, and then they wait until the development is completed.
Okay.
Then at settlement, once everything's ticked off and everyone's okay, we give you the keys, you give us the money, and that's settlement. Then you move in.
Yep.
Then you have 12 months of a sort of a defect liability period for minor things. Things like your glass was scratched or there's a tile that's chipped.
Yep.
If it hasn't been fixed before you move in, then you are within your rights to make sure it's reported and documented as soon as possible, and then the builder and the head contractor should remedy that for you. Outside of those 12 months, then minor defects like that are not taken into account. Between settlement date and the 6 years, 9 months, if, for example, the building starts cracking and concrete starts falling off, then yes, they have to come and fix that for you. If you're the developer builder, you have to go fix it. We do contracts where we appoint a contractor on our behalf, and they are a builder. They're specialised builders. That's what they do for a living.
Yep.
And then, once we hand the keys over, then technically, yes, we walk away, but we are contactable. So we make sure that our sales team is still available.
Okay.
It just makes it easier for people to be organised, and if they have problems, we say yes, you can claim that, or no, you can't. I'm sorry, it's not in your contract. And if there's an issue, you should consult your solicitor, and then we can take it further if you wish. So, yeah,
it's a lengthy process.
It can be, but we really, you're never going to please 100% of people. That's a fact, no matter what you do.
Yeah.
But we do our very best because our reputation means so much, and it's our family name.
Sure.
And our family name means a great deal to us.
Sure.
So we do our very best to uphold the agreement that we've made. But if you're going to make claims or accusations that we don't believe is correct, then evidence is required.
Sure.
It hasn't happened very often to us, so I don't.
Well, and that probably comes back to your plan and your research, and not just going on.
And then you hope the buyer's done their research. You really do, because you're assuming. So I work in the sales side. So when I'm down on this, I'm actually speaking to clients quite a bit, which is rare. You don't normally get someone in the core development team that's on site selling. But that's what I really enjoyed about that, is I'm speaking to people and they'd say, okay, this is good. But then I'd say, right, so do you know who the builder is? Have you done your research? And they say no. And I say, okay, this is who the builder is. Go home and research it.
Yeah.
If you're comfortable with who we are, who they are, what the price is, what's selling, come back and let's do a contract. And I'm not just saying, I know you assume people say that all the time, but that is literally how I do it because of the position I'm in. And they'll come back and go, you've lied to me.
Yeah.
And I'll say, no, I really didn't, because I gave you as many options as you could.
Yeah.
But sometimes, once again, people will take your money. They will. They're not going to stop you from being stupid, because there's no law against your stupidity.
Unfortunately not.
Unfortunately not. Well, there are in certain cases, but not really. That's just buyer beware.
Yeah. And again, there's a big theme underlying all this. Is from the builder's perspective, from the developing perspective, if that's the route you want to get into. From a buyer's perspective, you're buying your first home, you're buying off the plan, whatever it is. And in all of this, it seems to be, do your homework, do your research, get educated.
Yeah.
Now, you've mentioned it a few times, but the one thing you didn't mention at the start was the markets.com.au website or portal, if you want to touch on that and what that's all about.
That's very nice of you. Markets, but it came from the experience of the developer.
Sure.
Markets with no vowels, because we hate vowels, but markts.com.au. So I was finding when I'd have these conversations with people in the sales office, they'd be asking me, okay, so what's a body corporate and how does that work? And when I pay my body corporate fees, how does that work? And I found, okay, well, this is information that I see as basic, and we're here to facilitate that. So I went onto the computer and I thought, so why are people not being able to find it? And in pieces, it's all over the place. But I really thought, all right, we need to supply some real honest information that isn't shrouded in trying to get your information to do things with it. It was literally just to inform the buyer.
Yep.
So they're more educated. So when they're making those decisions, it's simpler for me to sell it to them, because I can say, here, have a look at this. Everything you need to know is there. If you're ready to make a decision, we're here to facilitate that. That's where it started.
Yep.
And now we've been lucky enough to, because I don't want it to be coming from me as the authority. The purpose is to get people who literally live and breathe this stuff every single day in their profession. I can talk about the sales and marketing side of property development all day and all night because it's what I really enjoy doing and it's what I do. But I can't tell you what the conveyancing laws are, and nor should I. That's what a solicitor's for. And I'm unlucky enough that I'm speaking to solicitors, speaking to financial planners like yourself,
Yep.
And trying to give information to people in a way that they'll understand it, and it will give them a basic explanation. So that's what markets.com.au is, a buyer education platform.
Great.
We try.
Yeah.
But I love it.
Yeah.
I love it.
Excellent. Well, very, very valuable bits of advice on all things property, which has been great.
Thank you, Ross. I've really enjoyed it.
Couple of things to finish on that we try and ask in some shape, way or form to most of our guests.
Okay.
You can pass if you need to. But first of all, what does money mean to you?
The ability to be comfortable and secure and look after my mother and my family, pretty much.
Excellent. One thing that you learnt about money, or you know about money now, that you'd wish you'd been told or learnt earlier on in life?
Really interesting. It used to be something that I thought was the be all and end all of life. I really did. I used to just want to be rich. I remember that. And then my dad got sick, actually. And then I thought, that's not going to change his illness, the fact that he had money. That's not going to change anything.
Yeah.
And then I started thinking, okay, to facilitate the ability to make everybody around me comfortable, that's the biggest lesson I learned, is I changed my perception on what money could achieve. I thought it could achieve anything, but it can't. What it can do is facilitate most things. So yeah, that's sort of where my perspective changed a bit on money.
Excellent. You get a call tomorrow, you won $1 million.
Oh,
What do you do?
what do I do? Straight away, first thing I thought, so, like a psychology
Yep.
test. First thing I said was low cost index deposit. Just leave it in the bank somewhere.
That's exactly what I wanted to hear. Podcast over. You heard it here first.
First thing I thought was just, what are they called? Low cost index fund. Because
I like the way you think.
that's what Big Warren.
Yep.
I know that Warren Buffett did that bet.
Yeah.
That any managed hedge fund versus his index fund. What a guy.
10 years in a row.
Made $1 million.
10 years in a row he's won that.
Not that he needed it, but he made $1 million. Amazing guy. What would I do with it? Right now, 100% put it into the business.
Okay. Excellent.
Into markets and really start to get more content creators on board that could create even more meaningful content for people, because I think it is really valuable.
And it seemed quite passionate about it as well.
Yeah, I'm enjoying it. But I like the fact that I'm able to build a community and people are starting to talk to each other on the platform, which is really, really important.
No, it's good. I've enjoyed it. It's,
good.
It's been educational.
That's the key.
Yeah. And final question for the podcast. When is the band getting back together?
Actually, we're going to do an album this year.
Actually?
So, yeah.
Do an album.
There's an album this year.
Fantastic.
So hobbies are very necessary.
Fantastic. That's exactly what I wanted to hear.
But yeah, we've spent a little bit of time. One of the guys has got a solo thing going on. The other guy's got a few kids now. So we'll be on Spotify before you know it.
The Gold Coast is calling for it, mate. They want you back at Elsewhere. They want you rocking out. Well, excellent. Any final tips that you can leave the listeners with?
We really have hammered home the important ones: building relationships, doing your research, and having valuable conversations with people. But then also have belief in yourself and back yourself. If you think, and you've done enough research, and you think, no, this is the deal that I want to do, and 10 people are telling you not to, then sometimes you've just got to ignore them and back yourself. So I would say that as long as you've got the knowledge on board, then back yourself in and don't worry about what other people are saying, because if you're wrong, then you're wrong. And if you're right, then they're wrong. And that's a big win.
Excellent. And best place to find out more about you and what you're up to?
Yeah, I'd say markets.com.au is a good start, but
Facebook, website?
Facebook, yeah. So the Facebook is and we've got a group as well called the Property Investment Hub.
Okay.
So if anybody's interested in getting amongst the group, then there's long form interviews on there.
Yep.
And then there's access to other things that aren't released on the other pages. So
Excellent.
yeah, but it's been an absolute pleasure, Ross.
Well,
Thank you very much.
thanks for coming on board, James.
My pleasure. Thanks, mate.
If you've enjoyed this episode of the Young Money Podcast, make sure you subscribe to keep up to date with all the latest episodes. And feel free to leave a like, comment, and share it with a friend.